Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Artificial intelligence has been the talk of the market over the past 6 months to a year, but to be frank, we're not actually using artificial intelligence for all that many things, at least from a consumer basis. A ton of companies have introduced AI products, but that doesn't mean that they're generating a lot of revenue or a lot of value from those products yet. This could be a much slower burn than a lot of investors thought. So I want to get into a few data points that I think are really interesting for investors to think about on the fact that maybe this AI bubble is already starting to pop. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And I want to start with the news item that caught my eye the most over the past week. This has been in multiple sources, but Microsoft is reportedly reducing the number of orders for NVIDIA H100 chips. Now, this article goes on to say that this is a positive sign for the industry, that other players are going to be able to get involved. But what this shows is that Microsoft, the company that has a huge stake in OpenAI, really the company that kicked off this AI boom, is not seeing necessarily as much demand or growth as they were in the past. Let's go through a couple of items behind that. I think the information coming out from ChatGPT is really interesting. This is something that I have highlighted a few times on this channel, but you can see that there was a spike in interest in ChatGPT in November and December that kind of waned over the holidays and then really just steadily trailed off from February all the way through until June. Now, it has picked up recently, but what happened in this intervening time? Well, this was summer break for kids. So I think the question for ChatGPT specifically is, what is it being used most for? It would indicate here that, at least based on search traffic, that somewhere around a quarter to 50% of the search traffic for ChatGPT is used for school, for homework. That is not a high value use case for artificial intelligence. Kids are not going to be paying $30, $50, $100 a month for a subscription to an artificial intelligence tool. At the same time, Google's products or Alphabet's products have not gained as much adoption as even ChatGPT. So the leader is really kind of falling from its peak, and the companies that are trying to catch up to the leader, like Bard, are not gaining a ton of traction. Now, I think there's a clear difference between a company like NVIDIA getting a ton of new orders for their artificial intelligence chips, but specifically the H100, the investment that's going into venture capital backed companies. That business continues to do extremely well because they're building infrastructure, they're building businesses that want to add value a year, 2 years, 10 years down the road. But what we have not seen in artificial intelligence yet is the real home run use cases and the everyday use cases for AI. If we were seeing those kinds of things, we would see companies like OpenAI, Bard, Microsoft. We would see them introducing more and more AI products and touting how many subscribers they are getting to their AI services. But that's not really what we're seeing today. In fact, from a news cycle standpoint, it seems like the focus on artificial intelligence has really started to die down. And that's in large part because there's not as much interest in it. People write about things like ChatGPT and artificial intelligence when it gets a lot of interest. When that interest wanes, there's a correlation with both the number of people searching and interested in a topic like that and the revenue going to those companies. So I think after an absolute explosion in stock prices over the past year for AI related companies, anybody that had anything to do with AI, what we're seeing now is that companies are going to have to show that they're generating both revenue and increased earnings from artificial intelligence. And Microsoft doing any sort of cutting back, ChatGPT showing itself to being primarily a homework tool. These are not good signs for this bubble continuing to get bigger and adding ultimately long-term value. Now, I think AI is going to have value over time, but AI went from basically nothing in October and November to the talk of the market earlier this year. And that's just a recipe for disappointment as we get into later in 2023 and into 2024. We actually see, did any rubber hit the road? And I think the answer may be a little bit disappointing to investors. So I think this AI bubble is really starting to pop. It's going to pop in different places at different times, but don't expect too much from AI over the next year. What do you think about the future of AI? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.